Getting a loan today is very different from the way it was just a short time ago. Even though the process is much more exacting now, there are some important steps you can take to avoid problems and delays. Many of these items may seem unnecessary, but it is important that you pay attention to them. These details are more important than they have ever been. First, here are some things you should not do. Don't quit your job, retire, change your hours, or make any significant changes to your employment until after your escrow closes. The lender will call your employer a day before funding your loan to make sure you still work there. If you've retired or quit, you won't get your loan. 2. Don't apply for or take on any new debt. Every single inquiry to your credit report will have to be explained to the underwriter in writing, and if an inquiry has resulted in any new debt, your loan will have to be re-underwritten. That can cause delays. If you're paying off credit cards to qualify for your loan, be sure to show where the money has come from to pay them off. If you pay online, provide a statement showing how the account was paid off and what account was used to pay them off. Don't allow anyone else to run your credit. Not only can additional inquiries affect your credit score, but you will have to explain every single one of them in writing. Now, here are some things you must do. First of all, keep your financial condition, bank accounts, income, and debt as stable as possible while your loan is in process. If you transfer money from one account to another, you will have to document or paper trail that money. Provide your loan officer with statements for every account you have. If you transfer $500 from one Wells Fargo account to another, you will have to provide statements for both accounts, even if you are not using all that money in your transaction. If you keep a significant amount of cash on hand, get it into your bank account early in the game. The underwriter will ask for the last 2 bank statements, and if there are any large deposits, you'll have to explain and document them. The same thing goes for other sources of cash, like garage sales. If you sold $500 worth of goods for cash one Saturday, create sales receipts for all those items as you sell them. If you're purchasing a property, make a copy of your earnest money deposit check. Keep that with the receipt you get from the title company. As soon as that check clears your bank, give us a copy of the canceled check front and back. Any self-employment income requires documentation with full tax returns. You may have shown a loss because you were able to write off many expenses. Keep in mind that the bottom line of your Schedule C, with some adjustments, will be the income used for your loan qualification. If your company is a partnership or corporation, you will have to provide those tax returns as well. The way you write your purchase agreement can affect your transaction as well. Be aware that if you are requiring termite and roof reports in your purchase contract, the underwriter will want to see those reports. This is called opening a can of worms. Your transaction will be much smoother if you specify those reports in a separate agreement with the seller and pay for them outside of escrow. I hope all this was useful. We are never too busy to answer your questions. You can always call, tweet, or text us. All our information is right here. And if you'd like to start an application now, just click on the application link. Bye for now.